Wall Street is an interesting place. It's where vultures go to have lunch. It's where fortunes are made at the expense of the common person. There is employment, however. There's also serious fundamental problems with the entire system and how it works. It all starts from the central banks. The Fed was created in secret for a reason, because if anyone found out what they were up to, it would have never been allowed to be created in the first place. Those who cheer on the Fed and their schemes are either seriously unaware of their intent or are living in a different world. You came here for the truth, so let me unveil that for you. I've got a massive video today. There's way too much for me to cover. That's why these videos have been going on 17 minutes, 18 minutes and beyond, because there's just so much data. I can't get through it all in a day. I'm thinking, maybe do I do 2 videos a day? I don't even know, because there's so much jam-packed, so much going on. And yet all that people talk about is the fact that there's 7 shares of Amazon in their portfolio. Their fully diversified portfolio of 7 shares of Amazon has expanded into new levels. The reality of the situation is so much different. We are looking at the sell signal that has been flashing red right now. I'll show you that in a second. We're also going to look at the inflationary factors, whether it's food prices, whether that is real estate, whether that is going on in commodities, and you look at so many different things. I'm going to show you a few examples of that. I got so many charts to show you as well, articles as well. There's so much. Let's go. All right, I caught my breath. Let's get to it. Wall Street's optimism is close to flashing its first sell signal since 2007, according to Bank of America. Bank of America's sell side indicator, which I'll show you the chart in just a second, rose in February to 59.2%. That's 1.1 points. 1.1 points from sending a sell warning. The gauge tracks Wall Street's bullishness and aims to indicate when optimism is overextended, something that I've been covering quite often, in fact, here, but now we have Bank of America's sell indicator. I want to also note the neutral rating suggests returns will be muted over the next 12 months. So it all depends here, because, there's only so far up this can go. It's going parabolic. And then what the expectation is that sort of you won't get the growth you had coming off of such a low point since March of 2020, but they do expect growth in general. Many of these individual companies, JP Morgan, Goldman Sachs, Bank of America, Morgan Stanley, for the most part, they are predicting higher and higher stocks. We'll see what happens. Sell side indicator just about 1 point away from a sell signal, and that is as of February 28th. And I just wanted to give you a little history. You can see right here, that is 07. And right now today, we're getting pretty close to that. So as they said, it's about 1 point away. Now, does that necessarily mean that, okay, time's gonna, be the same pattern, we see it, therefore it's going to crash? No, obviously not. If you look at what occurred right here as of, let's say, the year 2000, that still increased over the next several months. In 2001 or so, it peaked out. So we don't necessarily believe that this is it. As soon as it crosses the line, that's the sell side indicator triggering and everything just goes completely haywire. No, that's not the case. But it is showing us, in line with all of the other indicators, what is happening on Wall Street and how that reflects what we're seeing, not just in the investment community, but of course the algorithms, because they are paying attention to this type of signal as well. This is further information about that same thing here. Wall Street's bullishness is becoming a contrarian sell signal. Bank of America says excessive optimism is a reliable contrarian sign. That's usually the way it is. When everybody is bearish, then suddenly they buy in. Just like in March 2020, the bottom was there and certain prominent individuals were saying, now is the time to buy. The government's going to fix everything. They're going to print money. And so it's a great time to buy. And what happened? The markets came back up, even though the economy was in such a bad shape. They simply bought it up because the market, quote unquote, is a forward-looking mechanism. That's right. Of course, millions and millions and millions of people are unemployed, but that's not a problem, apparently, because we are inching closer and closer to full employment on their statistics. So the actual people that are unemployed apparently don't count. As you can see, as I just mentioned a few minutes ago, Credit Suisse had raised its S&P 500 target again. So most of the big banks out there are suggesting that we will see higher prices. So they're not necessarily using this signal here, and they're taking it in and thinking, well, you know, that's about to trigger, so get ready, let's all sell. That's not happening. But according to the indicator itself, it just shows you that they keep raising their targets. Okay, what's S&P 500 is going to be at 4,500, at 5,000, at 55. They just keep going up and up and up and up. And then what happens if there's a crash? They just drop their targets. Okay, S&P 500 at 3,000, S&P 500 at 2,500, and they just bring it down because it doesn't matter. These targets mean absolutely nothing. They are completely worthless. Really quickly, I don't want to go on too much with this, but I think it's important to cover. A Bank of America measure of their bullishness is near a level that historically has been bearish for stocks. The gauge assesses the average recommended allocation to equities by sell-side strategists and is very close to triggering a sell signal. Quote, the last time the indicator was this close to sell was June 2007, after which we generally saw 12-month returns of minus 13%. We found that Wall Street bullishness to be a reliable contrarian indicator. I like to pull up data from Guggenheim whenever I can because they've always seemed to have some reliable information and it's really well thought out. Their reports that they put out here, their articles, whatever you want to call it, are not very long, but they usually are packed with info. And they talked about the M2, they talked about other factors here as it relates to the bond market and so on, but it was M2 that I wanted to touch on really quickly here. 2020 saw an unprecedented spike in M2 money supply, and the purple line right here is the year over year M2, and then you have the blue line, which is the year over year real CPI deflated M2. But regardless of how you look at it, it's pretty clear the direction that it has headed, and it's not going to stop. That's very clear. So where it ends up, nobody knows. But the damage that it inflicts as we look back on it, I think it will be seen as an unfortunate part of history. There's a lot in here, but I just want to touch on a couple points. And you could see in this paragraph, as a hangover from the prior administration's cash management, the Treasury currently holds about $1.6 trillion in its general account at the Fed, something that I touched on in previous videos. And right here, it's just saying that the current administration has decided to use more than $1 trillion of this excess cash to pay for stimulus rather than borrow new money. This is causing M2 money supply growth to soar at a rate of 25% over the past 12 months, more than 5 times the average annual growth rate going back to 1960. So we'll see what's going on with that, because regardless of where you look today, prices are inflating dramatically. Some say no, it's got nothing to do with this. It's got nothing to do with that. There's no inflation. There's deflation. This guy told me, and he's right. He's totally right because he was able to convince me. Therefore, he's right. Look, you can say whatever you want about inflation, but everywhere I look and every single indicator, it seems to be pointing towards that direction. But I will stress this because maybe I haven't been very clear about it before. Let me say this. If we are seeing inflation today, when we look back, coming at this point here, it's going to seem like nothing. It's going to seem like a blip on the screen compared to where we're going. Until we are printing the quadrillions of dollars, what they're doing now is nothing. That's nothing. That's baby stuff. That's babies. That's Gerber baby food going in compared to what we're going to be seeing. You're going to get, this is going to look like that mushed up carrot and applesauce compared to where we're going. Okay, I don't know if kind of weird sort of description that is, but that's what I'm talking about, because they're going to be printing so much that we are going to have to go into a new digital realm, because you know what? This whole paper thing, it's not going to work. We're printed up too much money. The dollars are devalued. I think the best thing to do to save money, oh, that's right, it's going to be going to a digital environment. Let's get everybody on that. Let's get everybody on the new digital currency. Oh, that's right. But don't worry, because we're going to protect you. Everything's so safe. Those old bills, if you have, you've got 6 months to bring them in. You know, they won't be good in a little while. So you got to bring them all into your local bank, and don't worry about it. We're going to take care of you. We'll give you some of that new digital cash that's inflating away rapidly. This could very well happen, and it's not because they printed 1.6 trillion or 2 trillion or 4 trillion or 5 trillion. It's going to be because of what's coming down the road. They are trying to print their way out of everything. You've got a hangnail, let's print money and fix it. You've got a scratch on your back, let's print money and fix it. It's a stupid thing that has never worked ever in history, and yet the people who are asking for it are desperate. That's what it's all about. They want it because maybe their business is failing, maybe they lost their job. I understand. They are desperate for a solution. But if you look at who the money actually goes to, you wouldn't agree to it. You would not agree to it, because that money is not being used to benefit the people who actually need it, and that is a fact that is documented. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce, if you want to learn how to sell stuff on the internet, you can learn for free at my website, theamazongps.com. If you want to learn about the financial system, my 2 books will explain it for you very easily, very simply. Check them out at the link in the description. And of course, if you have not checked this video out yet, you definitely want to click it, and I'll see you there.